Hello and welcome back to iCalculator. In today's video, we're going to unravel the complexities of taxable income in Nigeria. Understanding what counts as taxable income is fundamental for accurate tax reporting and compliance. Let's break down the topics in this video. First, we'll outline the different categories of taxable income in Nigeria. Then, we'll provide real-life scenarios and examples to illustrate these categories. Finally, we'll discuss some special considerations in taxable income calculation. Let's dive into the categories of taxable income. Let's start with employment income, a category most familiar to many individuals. This includes what you earn from your job or profession, such as your salary, wages, bonuses, and allowances. In Nigeria, the tax treatment of these earnings varies depending on the nature of each component. For instance, basic salary and bonuses are typically fully taxable, whereas certain allowances might have exemptions. Understanding which parts of your income are taxable and how they fit into the Nigerian tax laws sets the stage for accurate tax planning and compliance. Now that we've covered the intricacies of employment income, let's shift our focus to the realm of business and professional earnings. This segment is especially pertinent for entrepreneurs and professionals. If you're someone who derives profits from business activities or professional services, it's essential to understand how your net business income is calculated. This process involves deducting permissible business expenses from your gross earnings. For example, expenses like operational costs, employee salaries, and other necessary business expenditures can be deducted. This careful calculation ensures that you're accurately reporting your taxable income. With a clear understanding of business income taxation, our next area of interest is investment income. Investment income diversifies the tax landscape with its unique characteristics. This category encompasses dividends from shares, interest earnings from bank deposits, and income from renting out property. Each of these income streams has distinct tax treatments. For example, dividend income may be subject to withholding tax, while interest and rental income are typically included in your overall taxable income. Navigating through these various forms of investment income highlights the nuances of Nigeria's tax system. As we delve into the details of how investment income is taxed, it's crucial to stay informed about the different rates and regulations. After exploring investment income, we now turn our attention to capital gains. Our final stop is the world of capital gains, which emerge when you sell assets like properties or stocks for more than their purchase price. The calculation of capital gains tax in Nigeria demands a thorough understanding of several factors, including the asset's acquisition cost, any improvements made, and applicable deductions. For instance, selling a property that you've upgraded can result in a capital gain, on which tax is calculated by considering the original purchase price, cost of improvements, and selling price. This segment provides clarity on how capital gains are taxed, ensuring you are well prepared for these financial events. To make these concepts clearer, let's illustrate them with scenarios. For employees like Ada, their salary, wages, bonuses, and allowances are subject to income tax. In Nigeria, the tax rate applied to this type of income depends on the total amount earned. Typically, the higher the income, the higher the tax rate. The tax is deducted directly from the salary by the employer through the pay-as-you-earn, payee system. In the case of individuals like Chinedu, who are self-employed or run a business, their net business income is taxed. This is calculated by subtracting allowable business expenses, such as equipment costs, operational expenses, and salaries paid to employees from their gross business income. The remaining amount represents the taxable income and is subject to the applicable tax rates. For investment income, such as the interest and dividends Zainab earns, different tax treatments apply. Interest income is usually subject to withholding tax at the source, meaning the tax is deducted before the income is paid out. Dividend income is also subject to withholding tax, often at a standard rate, and this tax is usually considered the final tax on this income. When individuals like Emeka sell an asset like property or stocks for more than the purchase price, the profit made is considered a capital gain. In Nigeria, capital gains tax is calculated as a percentage of the gain. This gain is the difference between the selling price and the purchase cost, including any expenses on improvements made to the asset. The applicable capital gains tax rate is then applied to this profit. Each of these income types has its own set of rules and rates under Nigerian tax laws. It's important for individuals and businesses to keep accurate records and understand these rules to ensure compliance and effective financial planning. For the most current rates and detailed guidelines, it's advisable to consult the Nigerian Federal Inland Revenue Service or a professional tax advisor. In the Nigerian tax system, specific income types have particular considerations and exemptions. Employee allowances such as housing and transport might be partially or wholly exempt from taxes, reducing the overall tax burden. Capital gains from certain transactions, like selling a personal residence, may also be exempt or eligible for tax reliefs, encouraging investment. Retirement benefits like pensions might have distinct tax treatments, varying based on the retirement plan structure. For residents with foreign income, it's taxed in Nigeria, but subject to relief through tax treaties to avoid double taxation. Furthermore, the tax system offers incentives and deductions for investments in certain sectors, charitable contributions, and specific expenditures, supporting economic and social objectives. Understanding these nuances is essential for proper tax calculation and compliance, and it's advisable to consult tax professionals or the latest guidelines from the Nigerian Federal Inland Revenue Service for detailed information. For those looking to get a comprehensive understanding of taxable income types in Nigeria, our iCalculator website has extensive resources and examples. We provide detailed explanations and practical scenarios to help you grasp these concepts fully. Visit our website through the link in the description below for more information. That concludes our exploration of taxable income types in Nigeria. You should now have a clearer understanding of the various income categories and how they're taxed. In our next video, we'll delve into capital gains tax on personal assets in Nigeria, which are crucial for calculating your actual tax liability. Stay tuned. We hope you found this video helpful. If you did, be sure to subscribe to our channel, like this video, and switch on notifications to ensure you never miss an update.